Okay, heading back to the markets once again, you have all the key indices firmly in the green. Sensex is logging in gain in the excess of 300 points. Trading just above that 38,000 mark. Nifty is testing, or rather just, kissing distance away from 11,200 mark. Gaining in the excess of 100 points as we speak. Broader markets mirroring a similar sort of up move as far as the quantum of gains is concerned. Mid and small cap indices both gaining more than 1% each. As far as sectoral performers are concerned, like I flagged off, only the FMCG space is looking a little quiet right now. It's down about 0.1%, but look at a Nifty Metal up solid 3%. Nifty Bank is up 2%. Nifty Auto is up 1.8%. You also have IT names which are gaining very smartly in trade. IT index is up 1% as well. You have realty. In fact, most of these sectors are gaining more than 1% each. Nifty Pharma relatively quiet, up by about 0.4%, but nothing much to complain there. From individual gainers, you have Hindalco leading the pack in as far as gainers are concerned. 5.5% higher for this one. Tata Steel is up 4%. Axis Bank is up 3.8%. Maruti is up 3%. JSW Steel, ICICI Bank. It's a day that is single-handedly being aided by metals, banks and auto heavyweights, and we can clearly reflect that in the quantum of gains as well, which each of these heavyweights and the big names are logging in. Talking about a key gainer, Axis Bank, then the stock is up more than 3%, actually close to 4%. It's an ET now news that we had broken last afternoon rather. Top Nifty gainer, the news has been confirmed. They've launched a QIP and they're looking to raise 10,000 crore via this route. They've set 442.2 rupees a piece as floor price for the QIP. The board meeting is now on the 10th of August to decide the QIP issue price. They may offer a discount of not more than 5% to the said floor price. So let's see what will be the final figure, what will be the timelines, but what we know so far is that yes, a QIP is very much in place and the stock clearly reacting to that news. Kunal and Gaurang both are joining us this morning to help our viewers out and to talk about their individual stock tips. Morning, gentlemen. Thank you so much for taking time out. Kunal, coming first to you, the resilience that we're seeing in the market, look at the way yesterday we saw, especially the second half of the session. Even right now, we're firmly adding to that and quite sharply so. Look at a Nifty, which is on the verge of breaching 11,200 once again. What is your sense on the technicals, your sense going by the charts? Will this rally continue?
Well, it seems like a ferocious, comeback for the Nifty in the last 2 days, and I think yesterday the credit goes to Reliance Industries. The way it, showed up the price performance. I think 7% up on Reliance Industries, and 140 points on the Nifty, or the contribution on the Nifty was purely by Reliance Industries. But today, I think it's a bit of a mix of many of the large cap names. Many of the sectors are today participating. So the Nifty Metal Index is doing pretty well. Auto stocks are doing pretty well for themselves. Banking stocks are also charging up quite well. So I think it's a mix of stocks today. So it's better than what it was yesterday in terms of the market mix. And I believe that could probably be one of the reasons why one can expect that this gains could probably continue. But it's just that the Nifty has to break a certain set of hurdles to try and restart a new trend for itself. And I think the bigger hurdle for the Nifty now is at 11,350 mark on the spot levels, which we tested I think a week or two back. I think that could now be an important resistance. So I think till the time we don't break the above those kind of levels, it could be very, very stock specific action for the index, and I think that's where one has to focus on at least for the next couple of days till the time we don't break above those key resistances.
Okay. Gaurang, how do you read into the corporate earnings, the fundamentals that are in place? We are in the midst of, a host of businesses and a great part of the economy, which is still opening up, each and every day, bit by bit. Does the market, do you think, has enough levers in place, enough legs for growth at this point in time? How would you view the benchmarks and the up move that we see?
Thank you, Karanya, and good morning to all of you all. So, we are coming out of a difficult phase, and to expect that within a month or two, things will be back to pre-COVID levels, I think it's a little bit unreasonable to think so. We have still going through the unlock process. From 1st of August, we've had unlock 3.2, and slow and steadily, I think, state by state, we are seeing that more restrictions are being lifted off. On the flip side, Karanya, some new states have started to take place where cities like Mumbai, Delhi, states like Rajasthan and Ahmedabad, where case in point, we have high number in Andhra Pradesh, Telangana, we have high numbers in Tamil Nadu, Chennai, Karnataka, Bangalore is witnessing an uptake. So I think it will take time for things to settle down. But nevertheless, having said that, I think it is good to see that the numbers on the first quarter this financial year, we are almost going to see curtains down by next week for the first quarter this financial year. And there has not been any great disappointment, if you will. Some specific companies in some sectors may have disappointed, but overall, if you ask me, I think whatever we anticipated, whatever coverages we have in terms of sectorial picks, some of them have delivered in line, and maybe a few of them have delivered much better than what our estimates were. In terms of the Sensex and Nifty, well, hurdle has been 11,250, 11,300 on the Nifty spot. But my sense is that on 3rd August, we saw a floor of 10,800, not once, but twice, 10,850, 10,900. So, we are having a limited downside, but if you are able to take off 10,000 to 11,250, 11,300, then I think we are preparing ourselves for at least 200 points, 100, 200 points uptake on the Sensex, and equally 500, 600 points on the Sensex. With that said, Karanya, 2 investment ideas from our side. Private sector bank, Kotak Mahindra Bank, we have renewed our targets to 1,600. And there is one company which is associated with rural India. And mind you, Karanya, metros and tier 2 cities have not contributed as much as semi-urban and rural India has started to contribute. And we heard that in the verbatim of some of the FMCG management companies that have come and given their outlook. So we are quite bullish on agri sector, and over there, one company that we are extremely positive is Coromandel International. We are targeting 950 from a long-term point of view on Coromandel International.
Okay, that's heartening to know. Thanks, Gaurang, for your picks and your view on the markets. Kunal, back to you for your trading ideas.
So, well, currently I'll give a one buy and one sell. So, the first one would be a buy on UltraTech Cement. That stock, I believe, is looking fairly attractive. I think 2 days back or 3 days back, the stock had gone through a bit of a correction. It's now making a good comeback. So, I think on the short-term charts, there are some good supports at the 4,000 mark for UltraTech Cement. So, keeping that as a stop loss, would look out for position targets of 4,400. And second would be a sell on Ramco Cement. I think it's a sort of a reverse chart. The stock is now on the verge of breaking its support. 675, if I'm not wrong, is the previous swing support for Ramco Cement. So I would suggest a sell or a short below those levels for a target of 640 at least, and stop loss could be kept at 700.
All right, moving on then to our viewer queries. First up, we have a tweet from Taresh. He has 10 lakh rupees worth of corpus. He wants to invest in stocks with a 6-month time horizon. Wants the experts to suggest stocks that have potential to yield in double digits over the next 6 months. Kunal, given that the time horizon is not a very long one, what are the kind of stocks that one can bet on at this point in time? Given the corpus, which stocks should he invest in?
Well, difficult to say that which stocks will double in the next 6 months or so. But then I think it's time that you lap onto quality stocks at current levels, because the markets are now getting to a very decisive kind of a phase. See, at one point of time, many of these asset classes are moving up together in tandem. Gold, silver, crude also is trying to inch back about those 40-odd levels. You have the dollar index falling down. You have global markets or stock markets moving up. So it's almost like all the asset classes are moving into tandem. We don't know which of the asset classes will give way some sort of a correction. So I think in that regards, in that kind of a market scenario, it's more important and prudent to stay with quality. I believe you can probably look at names like ICICI Bank, maybe Reliance Industries. A buy on dips approach could be a good approach. Sub those 2,000 levels, I think is a good and attractive entry point for Reliance Industries as well. ICICI Bank, HDFC Bank, I believe are quality names. Yet again, those stocks could be bought into. You can look at maybe a Titan or a Muthoot Finance as well. I think these stocks are looking attractive, especially on the back of this gold rally. From the auto pack, I think if you're looking to buy something, then I think a fresh candidate which has emerged as a breakout is Tata Motors. I think last week or I think yesterday or day before, when the stock had broken above those key resistances on the back of results, it's broken above some swing pattern. So I think even Tata Motors could be added up into the list of stocks which can move up significantly higher from the next 3 to 6 months.
Okay, Gaurang, Kunal has already given a lot of these, solid companies with solid fundamentals, mostly blue chip names as well. Given the time horizon is 6 months, he has a decent corpus of 10 lakhs. Where do you think he should invest in?
Well, first of all, let me advise him that investing into equity market is exposed to all kind of risk. I hope this investor understands that very clearly. And this is not like a jackpot, that you invest now and within 3-6 months you get double-digit return or you get your investment doubled. There are all possibilities that your capital may also erode if things do not work out, at ground level in favor of the market, or whether there is some geopolitical tension, or whether there is some unfortunate event that unfolds. We are already coming out of one of those unfortunate events. So please be extremely careful, cautious, and have this clear understanding that you are investing 10 lakhs with a clear-cut understanding that you have enough risk appetite and that this capital can give you 10, 15, 20% return also over a longer period of time. I am not in the camp that can advise for 3 months, 6 months. I am a fundamental analyst. I advise for long-term point of view. So my advice to this gentleman would be, or investor would be, that your 10 lakh rupees, you break it into 5 parts, that is 2 lakh rupees each. I will try to suggest 5 different stocks from different sectors, primarily large cap and maybe some mid cap. So the first 2 lakhs you should allocate to Reliance Industries. The second one to a private sector bank called HDFC Bank. The third 2 lakhs to maybe a cement company. That can be, Kunal has mentioned about UltraTech. I concur with his view. So you can allocate 2 lakh rupees, third 2 lakh rupees to UltraTech Cement. The fourth one to FMCG major HUL. And the fifth one, this can be allotted to either a specialty stroke agrochemical company, something like a PI Industries or Vinati Organics. Or possibly you can have a look at life insurance companies, maybe HDFC Life or ICICI Prudential. So these are the 5 stocks, allocate 2 lakh rupees each and proportionately invest in all. But these are long-term investment idea, at least 1.5 year, 2 year plus, not for 3-6 months, and have a clear-cut understanding that this market is exposed to all kind of risk.
Okay. All right. Thanks for that. Let's move on to query number 2. It's an email from Ruby Dhillon. She's based in Chandigarh. She wants to know if it's a good idea to invest in BHEL at the current juncture. Kunal, the stock has seen its good and bad days. If you look at the lows of early this year, the stock has seen a good recovery from there. But the last 1 month has been a bit slow and a bit rough for BHEL. Do you think the rough patch is going to continue, or is it a good time to dip in?
Well, I for one believe that that this stock has shown good potential. So from 18 rupees or 19 rupees, the stock has doubled from those levels. It went to almost, if I'm not wrong, as much as 44, 43 levels, a few weeks back. So it's done pretty well for itself. And when you see such kind of a ferocious bounce into the stock prices, which double from their near-term lows when it's been in the thick of news flow, etc., it tends to remain more sideways. And I believe in that regards, it's possible that the last 2-3 weeks of price action, what you've seen for BHEL, it could probably persist for maybe another couple of weeks into the price pattern. So I think yes, from a near-term view, you may expect that the stock may remain more sideways. But what this move has done for BHEL is it's brought in a lot of fresh investors and fresh traders into this stock. So I think buy on dips approach could be a better approach for BHEL. The fact that the stock had rallied from those 80, 90 levels to 45 odd levels, if you can probably start buying the stock at close to 35, approximately, I think that should be a good entry point for BHEL.
Right. Okay. What about the fundamental aspects, Gaurang? BHEL, Vedanta, as Anil Agarwal was betting big on BHEL. He had said that it has huge potential going forward as well. And we saw the stock also run up quite significantly after that. But what is your reading of the company, how it's done in the past and how it's likely to perform going ahead?
So I would like to answer this query in two parts, Karanya, if you will. Firstly, if you are looking at capital goods engineering space, then there was a time when BHEL and LLT were going shoulder to shoulder. But over the last maybe 2 or 3 years, there has been drastic downward trajectory in terms of earnings for BHEL, and there is some kind of a slow growth for LLT. So if you ask me, if you're looking at cap goods engineering space, then I would rather advise to put or invest your money into LLT rather than BHEL. And I agree with Kunal, there is a lot of overcrowding on this counter. A lot of people have got into it because of low valuation, not understanding the headwinds that the company is facing in terms of execution and earnings problem. L&T on the flip side, you have two-way aspect. One is it's a major private sector player into cap goods engineering. It is also into hydrocarbon. It is into turnkey projects. It's a diversified company that you can have in your portfolio, along with a defense play, because they're having a huge facility to support the Make in India defense theme that the Honorable Prime Minister has spoken about. Or alternatively, if you are a public sector fan, then instead of BHEL, along with a defense play, our recommendation is to buy BEL. This is a relatively better company from a public sector undertaking, and of course a defense play over here. On the fundamental side, we have a reduced call on BHEL, so I would not vouch for getting into BHEL at all.
Okay, well, there's the verdict on BHEL from both of our experts. Thank you so much, gentlemen, for chatting with us and helping our viewers out as always. Moving on to some ET Now insights. How has August seasonality played out in the past? Jayesh is here for giving us a peek into the trend that has played out in the past. Let's see.
The month of August historically has not exactly been in the favor of bulls, because if you have a look at the market profile, the Nifty on an average in the last 5 years has declined about 1% in the month of August, while the Nifty Bank has declined more than 2% for the month of August itself, and the Nifty Mid Cap Index has given you mild positive return, with the small cap index also declining about 1.5% on an average in the last 5 years during the month of August. There are three sectors which really stand out for the month of August seasonality. The Nifty Pharma Index, which has given you positive return of more than 2.5% for the last 5 years, while you have the PSU Bank Index, which has managed to decline about 3% on an average basis, and you have the Nifty Infra Index, which has also managed to decline about 2.5% in the last 5 years on an average basis that I am referring to. As far as stock specific action is concerned, looking at the stock gainers, you have the likes of Adani Transmission and Trent, which have given you more than double-digit return on an average, and then you have the likes of Kansai Nerolac as well as Page Industries, which have given you 7% apiece. And the last one that we have on the list is Emphasis, about 4% that it has given you in the last 5%. Talking about the stock losers, you have Solar Industries, which have given you negative return, and from the F&O space you have Shriram Transport, which has declined about 4%, and then moving on you have Motherson Sumi as well, along with Godrej Industries as well as Vodafone Idea.
Okay, Jayesh, thanks for that update. Slipping into a break here, more updates on the other side. Stay tuned.
Hello and welcome back to Buy Now, Sell Now. Earlier on in the day, we spoke to the Managing Director of Amul, R.S. Sodhi, to understand the change in the consumer demand and how COVID has changed the consumption pattern. Let's listen in.
As far as food or the dairy sector is concerned, like you said rightly that there was no problem of demand, and some consumption sector stopped or reduced considerably, but some like household sector, that has grown very much because people were consuming more food or packed food or good food, tasty food of trustworthy brands at home. HoReCa segment, which constitute around 10 to 15% to the any food category, was initially zero. Now it is coming up 3 to 4 to 5%. So household increase has been, compensated for the HoReCa loss. And I think gradually HoReCa is coming up. So we are more or less at par. So is the case with other food companies. Definitely some distribution channels have changed. People buying habits have changed. People are buying either more from the general trade or from the e-commerce, buying more bigger packs in the metros, or buying more branded, trustworthy products. So that things have changed, but overall consumption of food is normal.
Have you seen a shift, Mr. Sondhi, in your portfolio, which is that have you seen that your customer base has migrated towards basic dairy products and they moved away from what could be called as luxury products?
Yeah, definitely. There has been major changes in few product categories. You see, in milk, the biggest category is pasteurized packed milk. That is normal. In spite of closure of hotel and restaurant, household consumption increased. No doubt, the cities or the area which are under containment, still consumption is low. I tell you, just today was the Eid. The Eid sale was the same record Eid sale what we had the last year. Or, Raksha Bandhan is, we have got a record sale of milk as well as paneer and dahi, which is going to be consumed for tomorrow. So consumption.
Okay, meanwhile, GCPL continues to be in focus on back of their Q1 numbers, which were largely in line. We caught up with the management. Here's the next up.
Yes, I do think that there were obviously, as we've saved cost in certain areas like travel or, advertising came down, I think there were extra costs in the supply chain, which will sort of get smoothened off as the year sort of progresses. I think it's also a bit of a sort of category and portfolio mix. So some of the higher, more discretionary, higher gross margin products, sequentially were better over the quarter, but, in April was sort of weak. So I do think we'll see positive movement on that going forward.
Sure. If you really had to highlight, Misawa, category-wise, and we'll get into details of each category in just a bit, where would you say the maximum pressure was felt?
So, like I sort of mentioned, 85% of our portfolio is actually household insecticides, hygiene, and value for money products. So actually in household insecticides, we grew at 27%. In hygiene, we grew at 15%. And value for money did see a decline of 13%, but, sequentially was much better month over month. I think 15% of our portfolio, which we call others, which broadly is, our air care business and this is globally. I think we definitely felt pressure there. But I think, we will see some amount of demand coming back. We are seeing month over month, and, July has been quite a strong month for us. And we're also doing things in these categories that are more discretionary to pivot. So say in air care, we've sort of combined the benefits of disinfectant with air freshener. So, you will see us do things to sort of go where the consumer demand is.
Sure. You know, what's compensated at a macro level, Nisaba, for the margin compression has been the savings that you guys have made in advertising spends. I don't know when things would get back to normal. Perhaps you would have a better handle on that. But like we were chatting just before the show began, do you think COVID has made you realize that there are better ways of advertising perhaps? And do you see a sustained saving in your ad spends going forward?
Yeah, I think, we didn't advertise also because of the supply constraints we face, correct? This was also a quarter of sort of supply constraints. But, we have our new product portfolio. We're seeing this huge demand for household insecticides and hygiene. So our role is, we are going against water in a situation like this, but execution is key. So, expanding distribution and creating, informing consumers, say in Protect, here are the new products that we have. We will continue to do that. Yes, but there have been lots of new learnings and, in a year like this, where to invest and where not to, will need sort of careful calibration. But I do think you will see investments in advertising definitely increase over the, what happened in Q1.
Sure. Like you as well reiterated that it's the HI segment which more so post-COVID is going to be of utmost significance. Not in the near term, but maybe another 2-3 years down the line. What sort of contribution do you see coming in from the HI segment?
Household insecticides is 30% of our global portfolio. So, I think we're looking to grow, across our categories, especially, sort of grow out hygiene. So I would think that because of the overall growth of the sort of company, I'm not sure that the salience would change that much over 2 or 3 years. Obviously, if this health and, this COVID's not going anywhere anytime soon. So I would say, maybe the household insecticides along with hygiene as a percentage of our global portfolio will probably increase. But I don't know how much of that will be household insecticides versus the other hygiene products.
Sure. But as I understand, you've launched about 45 products in the hygiene segment across geographies and saw a very strong growth of about almost 15% in the category. Any new innovations, because COVID has taught us to do things differently and in new ways, and has also in that sense created a vast new opportunity for perhaps new product innovations that you would understand better. Besides these 45 products, what else is in the pipeline when it comes to the hygiene category specific? Because, that's the direct interlinkage with COVID.
Yeah, so I think, one of GCPL's strength is this sort of innovation, value for money, low-cost manufacturing. So I think we're quite excited to bring that full force to the hygiene category. We already have products like Magic, which is a powder to liquid hand wash, which is probably the world's most affordable and most sustainable hand wash. So we see, products like that really having very strong lift off, and we will look to do more things like that, which are sort of disruptive and unique to us. I think if you look at something like the hand sanitizer market, I think there have been 600 brands launched. So I don't think, we are trying to play I think differentiation is very important to us, uniqueness, value for money, creating access to consumers, correct? Only about 17% of Indians have running water. So how do you actually create hygiene when you're in a situation that doesn't support it? So I think that's where GCPL has always been quite strong. So you will see quite a bit of that coming from us.
Sure. You know, I would have believed that vanity doesn't die down that easily, but the lockdown has taught us new things. And I understand that women are not opting for hair colors. They're fine with the grays. But I'm guessing, you know, now with the unlocking happening, hair colors as a segment, Misawa, would pick up gradually. Tell me a little bit more about when you actually see a full-blown recovery coming in. And have online sales already seen an uptick?
So we are seeing, you know, so I'm laughing a little bit because in our consumer research, actually women are saying that, no, you know, we want to look good and we don't want to sit around the house looking bad. While I think men are a little bit more lazy. So, you know, I wanted to share that from a consumer perspective. But what we are seeing, you know, what we are seeing is that especially in the value for money segments, which, you know, in hair color or braids in Africa, which is, you know, 50% actually of our Africa business, we are sort of seeing quite strong sequential growth. Correct. April was a washout, but then every month is sort of increasing. So I think you know, the beauty category we play in is not very high end. It's not that I'm going to a party, correct? It's also women sort of use these products on a day-to-day basis. So I feel confident. I feel quite confident of that. And one of the happiest things that's made me really happy at this time is I've sent our 30 rupee hair color to lots of my friends who are like, why have we been wasting all this time with very expensive products? So, you know, go GCPL on quality of quality.
Oh, yeah, absolutely. I mean, why invest in those exorbitant ones which were not even available during lockdown, as I understand? But, you know, as per your margins trajectory, Nisaba, where do you actually see your margins headed in the next few quarters? And I'm not talking about the immediate next quarter, but the visibility that you have for the next 1 year or 2 year perhaps. And which segment do you see maximum contribution coming in from?
Yeah, I see us having quite resilient growth. I think, you know, Q1 has, you know, been pretty resilient, and I see us sort of double downing on our execution and, you know, really sort of delivering this year. I think this health and hygiene, the household insecticides and hygiene, I see very strong demand, you know, continuing not just in India but in sort of other geographies also. And I actually would also sort of bet on this, you know, what we call value for money, which is the hair colors, you know, in India or in our Latin American business, or braids, which is a big portion of our Africa business. I think they're going to be sort of really resilient, because if consumers do have, you know, less money in their pockets, they will want, you know, the highest quality but affordable products, which has always been our strength. So, you know, I feel that we will be sort of resilient around 85% of our portfolio. For the other 15%, you know, say something like air care, one of the actually big impacts was in the car segment, because, I mean, there was lockdown, no one's driving. So we'll see. I think some of these things will sequentially pick up.
Yeah. Yeah, but you know, there could be a lot of pent-up demand, as was the case with car batteries. Once everyone does begin to use their cars and getting them clean, I think those car fresheners would definitely see a lot of pent-up demand for you.
Yeah, and
you know, like the problem seems to be the Africa business, and a lot of analysts that I spoke with. No, go ahead. Complete your point.
No, please, you go ahead. I was gonna. Please.
No. Finish your point, please.
I was just going to make my, for the car also, we have a lot of products which are air freshening and sanitization, which we feel, you know, will be important. Sorry, you were asking about Africa.
Yeah, absolutely. No, I was just saying that, a lot of analysts that I was speaking with about your earnings and the company visibility are saying that, Africa business needs a quick solution. We understand that a few steps have been put in process, but help your shareholders and analysts and investors understand what exactly is going on with the Africa business and what's the recovery plan that you've put in place.
Sure. So I think, for our Africa business, if I look at what happened in sort of Q1, April was like a complete washout. So, I mean, just the business sort of dropped. And then we sort of started seeing recovery, first maybe mid-May. And, June was much stronger. July has actually been a strong month in that business. So, in definitely strong positive growth. So I think, April was definitely, because of the lockdowns, there were very strict lockdowns in these countries and stuff. But I think even in Africa, our execution has sort of been really strong. So I've had strong braid growth, but that's also because my factories opened the first, we were out of the door. And, we are doing... We're not doing rocket science here, correct? It's about increasing distribution, giving consumers the products they want, going where the demand is. And I think things like hygiene and household insecticides have, huge opportunities on the African continent. So we've actually had a very successful, it's early days now in household insecticides in Africa. And I have told analysts, look, I can't convince you on an interview. You'll have to watch the performance. And we're very, very committed sort of to putting the business on the right track.
Watch the space. It should be your tagline, Misawa, for them.
Yeah, I'm putting quite a bit of pressure on myself with that in my last interview.
Okay.
Yeah.
No, but you're not new to the functionings of the company, clearly. This has been family business and you've been raised in the environment. What sort of vision have you set for GCPL for, say, the next 3 years? I know COVID has just about thrown everything off the ball, but in the next 3 years, where is it that you want to take the company?
Sure. I have shared the bad news that, the last sort of 18 months to couple of years have not been good for us. But, over the last decade, GCPL's had a phenomenal run. And, we actually 10x'd our size, over the last sort of decade, starting in about 2000, when we started our journey in 2007. So, I really want us to get back to strong double-digit growth organically. So I really think the strength of the company is this innovation, value for money, low-cost manufacturing. So just do what we do well, roll up our sleeves and just get back to growth. So I think that's my sort of single-minded focus over the next couple of years. And I think in consumer, in our sort of businesses, if you get growth, then the profitability does follow because you have scale leverage. So that's what I want to focus on. And I really think this is, our time, because consumers, to serve our consumers well, because they want to stay healthy. They want to, protect themselves from malaria and dengue. They want to be able to have affordable products to wash their hands and keep their homes clean. And that is that is where we are sort of really good. And I think even in the beauty segment, whether it's in our extensions business in Africa, hair color across the globe, we have these amazing high quality, affordable products. So I think we need to do more of what we do and just do it really well.
Moving on, we're counting down to the outcome of the Monetary Policy Committee meeting. Poonam is here to tell us what the street is factoring in, or rather expecting this time around. Poonam.
Well, it's likely to be a close call in terms of the RBI repo rate cut. Well, 46% of the economists do expect RBI to cut the repo rate by 25 bips, but close to around 54% expect RBI to still maintain a status quo as RBI has front-loaded repo rate cut. Reverse repo rate cut expectations are high, close to around 54% expect 10 to 25 bips cut and 23% expect a cut of 35 bips on the reverse repo front. CRR may be retained and also a accommodative stance may be maintained. In fact, the rationale for a repo rate cut is growth still remains fairly fragile. We're also seeing that demand side weakness is outweighing supply side disruptions, and hence the economy does need the monetary policy support. Having said that, RBI has front-loaded the rate cuts and maybe RBI may want to pause this time before further cutting the rates. In fact, RBI may widen the policy corridor further and may disencourage banks in order to park the funds in the reverse repo window, so that banks should in fact be lending more to the economy, and hence more reverse repo cut may be seen. Having said that, RBI's commentary in terms of the growth and overall demand weakness would be fairly important commentary in terms of the negative real interest rates and liquidity, and also bankers have asked RBI not to extend the moratorium, and hence what are the possible options that RBI is looking at, and the commentary in terms of fiscal stimulus will be important.
Right. Thanks for that, Poonam. RBI meet, very important to hear what the outcomes from that are. We'll all be closely looking out. Within the financial sphere also, there's a lot to discuss around banking and fundraising particularly, as now Axis has joined the long list of banks that is currently working on an issue. We believe it opened last night, $1.4 billion issue likely. The amounts haven't been disclosed, but it should be to the tune of that. There was also talk of some preferential allotment to Bain PE over and above the regular QIP book, which is being offered to investors. This was proposed on the 4th of August, yesterday, like we said. Again, just tying it up with that theme that we flagged off at the same time that ICICI declared a fundraise, or Kotak did for that matter, all the capital adequacy ratios are completely sufficient. So in the case of Axis, it's 17.47. Indices, which just also announced a fundraise in which the promoters infusing 1/4 of the total 3,200 crore. They have capital adequacy of 15%. Kotak 17+%. You can see the table in front of you. All the banks have sufficient capital adequacy, barring maybe a Yes Bank. So the fact that they're still raising obviously means that there's something which is yet to come in our economy or in our banking system rather, and then Q2 asset quality we've been hearing is extremely important. So those are just some key trends to look out for. Axis joining the list, ICICI the last large private bank left, still to announce a concrete fundraise. On that note, let's slip into a quick break here.
Welcome back. You're still watching Buy Now, Sell Now. Chinese smartphone manufacturer Vivo has opted out of the IPL 2020 title sponsorship after disagreement with India's cricket board over a discount on the sponsorship fee. Karishma joins in with more details.
Well, Vivo withdrawing its, of course, participation in title sponsorship in IPL sets a major setback for BCCI. But, this could be seen as a temporary setback because there are a lot of sponsors that we are learning are eyeing on in participating. In fact, what we are picking up is that maybe someone from the FMCG or the telecom space would set up in. But this is definitely a temporary setback for the IPL because Vivo was bringing in an amount of about rupees 440 crore, which is a major big deal for BCCI. But now with Vivo backing out of this, the new sponsor is expected to come in an amount of closer to 250 to 300 crore. Well, Vivo backing out is not just because of the discount that it was seeking, but because of the anti-China sentiments that's been persistent in the country for last few weeks, where the citizens have also been demanding of not being associated with any China manufactured or China origin company. Well, this is all dating back to a stronger push that is being led to is on being a self-reliant India and the kind of anti-border sentiments that were existing, that now the country is trying to focus only on made in India components. Initial setback definitely for BCCI with Vivo dropping out, which is the second most largest smartphone industry after all. But interesting to look at which new player could step in. But we're also learning that this could just be a temporary setback, since Vivo is likely to set to return in 2021 as things settle down.
All right, that was another really interesting bite. But on that note, I think we've run our course here on Buy Now, Sell Now today. Bye from me and Karanya. Keep it with ET Now for Markets at Noon coming up next.